Hey, what's up guys? John here. 130 countries around the world, representing 98% of the world's population, are working on central bank digital currencies. Now, I believe this is going to be a very, very big change that's going to be coming to the monetary system over the coming few years. Now, many people have spoken about their thoughts on the dollar either losing or retaining world reserve currency going forward into the future. Now, I don't like to make decisions based on what I think is going to happen. I just like to connect the dots, remove emotion from finance, and see things for how they are and make smart, informed decisions based on those facts. Now, when I'm doing that and looking at this information, it's really painting a picture here. And I think this picture is going to change the way in which we live in America. And I think it's going to really change the way in which America is viewed on a global scale. Please hit the like button. When you hit the like button, YouTube is going to share this content to educate more people about what's really going on. Every time you hit the like button, YouTube will share it with one person. So please do hit that like button. Also, today's video is sponsored by GreatCreditFast.com. That's GreatCreditFast.com. If you want to fix your credit, we'd love to help you fix your credit and position you for what I believe is going to be the greatest wealth transfer of all time. At GreatCreditFast.com, you can schedule a free consultation. Take a look at this information. Study shows 130 countries exploring central bank digital currencies, representing 98% of the global economy, now exploring digital versions of the currency with almost half the advanced development, pilot, or launch stages, a closely followed study shows. The research by the U.S.-based Atlantic Council think tank published on Wednesday said significant progress over the past 6 months meant that all G20 countries, with the exception of Argentina, were now in one of those advanced phases. Now, the world needs more reserve currencies. This is coming from a guy named Christopher Smart. He's the former senior economic policy official at the U.S. Treasury and the White House. Janet Yellen expects a gradual decline in the dollar share of global reserves. And you look at this here. How long will the dollar last as the world's default currency? The BRICS nations are gathering in South Africa this August with it on the agenda. Now, I saw this article here speaking about Kenya's tea exports. It doesn't sound like that big of a deal until you scroll down and you actually read what's going on. It's way bigger than Kenya, and it's way bigger than tea exports. Look at this. Many countries, including Sri Lanka, Lebanon, Pakistan, Ukraine, and Turkey, have imposed capital controls restricting imports to conserve funds. Some countries, such as Russia, China, and India, have sought alternative currencies for trade, while Brazil has suggested the need for a common currency in the BRICS group. The scarcity of dollars is closely tied to worsening debt problems. JP Morgan estimates 21 countries with a combined $240 billion in international debt are effectively locked out of capital markets. As a result, there has been an increased demand for aid from the International Monetary Fund. African countries, however, have been hesitant to rely on the IMF loans due to strict conditions attached to them. Politicians, including Kenya's president, have suggested the use for local currencies for trade payments to reduce reliance on the dollar. In summary, the scarcity of dollars in Pakistan is impacting Kenya's tea exports, creating challenges for KTDA. The scarcity is part of a larger issue affecting emerging markets, developing economies, where access to international bond markets has been lost, leading to a credit squeeze. The shortage of dollars is likely to hinder foreign direct investment and has already resulted in a decline in Kenya's tea shipments. Now, we've heard, obviously, the petrodollar, we've had reserve currency for 75 years. It's been really good for Americans. I mean, our economy has flourished. But if you look at the direction in which we are headed as a country, we're moving into this green future with net zero and Green New Deal and all these different things, right? Compared to, if you look at India, China, Russia, Brazil, these other countries, they're moving more into coal. They're moving back into fossil fuels, or heavily into fossil fuels. For example, Saudi Aramco strengthens China ties with 2 refinery deals, $10 billion refinery deals. You start to look at this more and more, $12.2 billion deal to build Chinese oil refineries. You start to look at this, they're moving into a place in which they're likely to be able to bring down their costs and become really competitive. Compared to America, we're stepping into a $5.7 trillion investment for renewable energy, and this estimate could cost, to get by 2050, $275 trillion. So this is the numbers that they put these numbers, they're all kind of thrown out around the board. Some are 5.7 trillion, some are 275 trillion. I mean, some of these numbers they say are much, much less. I mean, 45 trillion, whatever the number is, no one really knows. It's just like these random numbers they throw out, but they're big, big numbers, and they're going to be expensive to actually complete this transition. And those expenses are going to be passed on to the consumers, either through inflation, through printing money, or through increased tax revenue. But how can our economy substantiate this if we cannot sell our debt to other countries, right? And so if we start to look at what's going on to the dollar, this de-dollarization movement, it's really shocking. So what would happen if the dollar loses reserve currency status? So for the U.S., it would likely mean less access to capital, higher borrowing costs, lower stock market values, among other effects. Having the world's reserve currency has allowed the U.S. to run large deficits in terms of both international trade and government spending. If foreigners no longer want to hold dollars for savings, it would force significant belt tightening at home. As for what would replace the dollar, it's hard to forecast at this point. It's possible to imagine a world in which the euro or Chinese yuan eventually become primary reserve currencies, but a great deal would have to change in world politics to get to that point. Some economists also propose a financial system backed by either precious metals or cryptocurrency through the implementation of sorts of models could prove to be a considerable challenge, right? So you're starting to see this. Now, they're starting to do some interesting things here. Federal Reserve, say they did a stress test on 23 of the biggest banks to see if they could withstand a severe recession. So how would this actually take place? Because I don't know if this would just one day we wake up and we all have these central bank digital currencies around the world and everyone's trading in different currencies and it happens like that. Or maybe the U.S. steps into a really, really deep and dark recession where there's massive bailouts, bank bailouts, and people look at that and say, you know what, there's too much risk with the sanctions that were imposed overseas and other countries, with the dollar, with the direction of America, with what's actually going on there. Does it make sense to put all of our eggs in that basket? I'm not sure how it's going to play out, but I am sure that we are stepping into uncertain times. So the Federal Reserve says these 23 banks weathered a severe recession. Interestingly, the more you read this article and the more you look into it, they don't really talk about the true state of what's going on. They'll throw out they throw out soft numbers about credit, a little bit of commercial real estate, but they don't really dive into the true state of where the American consumer is right now. The American consumer today has less money than they've ever had before, and banks are holding more and more debt than they've ever had before. And the Fed has increased interest rates at the fastest pace in history. And so we're starting to see something that I think former models are not going to be able to accurately predict. The banking crisis has eased, but credit crunch still threatens the U.S. economy. Now, this credit crunch, I believe, is inevitable, and I think it's going to hit a lot of consumers, people that they rely heavily on credit cards. I think we could start to see people lose access to money. And that's why, I think having exceptional credit right now is so important, because you want to position yourself to get access to money. When they tighten credit, who do they tighten credit on? They tighten credit on the riskier borrowers, right? And who would they define risky? People with bad credit, people with a higher probability of defaulting on their obligations. Now, Morgan Stanley says commercial real estate will crash harder than during the great financial crisis. Here's 5 tips. 5 tips, right? Banks face the worst losses since 2008. Crisis and inflation cannot be tamed, says the world's brain trust of central bankers. 576 American banks are overexposed to commercial real estate loans as delinquencies rise. This came out last week. Commercial real estate is the next shoe to drop for regional banks and the stock market. But what I think would happen, look at this. The U.S. government spent $12.7 billion bailing out depositors. It's not like they just had the money. They essentially provided this funds. Who actually is going to pay this money, right? It's the U.S. taxpayer. That's who's going to pay this money. And so who is bailed out? You have stablecoin issuer Circle, SVB's top depositor, to the tune of $3.3 billion. $3.3 billion. Sequoia, right? $1.1 billion. You have Kahoon Limited, right? $900 million. I mean, it's unbelievable. The other payment platform, total balance $761 million. This is Bill.com. All these big bailouts. This card issuer, $634 million. Another streaming service, $400 million. I mean, it's unbelievable. So what I think could very well happen here, speculatively, what I think could potentially happen here is if you look at where banks are extremely leveraged. They're in a very, very weak position. 70% of all commercial real estate loans are held at small regional banks, which are in many locations, many markets, are poorly capitalized. They're not in a position to withstand a significant drawdown on these loans. So what are they going to do, right? I believe what we're going to start to see is a large-scale consolidation of banks. I think we're going to start to see some really, really big banks acquiring a lot of these small banks. I think we could potentially see a really big recession here in America. And I think we could see a lot of other countries saying, you know what, we're going to continue to move into this central bank digital currency basket of reserve currencies. We could start to see some really, really big changes here. If you just look at BRICS nations, for example, BRICS nations initially started as Russia, Brazil, China, India, and South Africa. Now it's over two dozen nations that are either already signed or in the process of getting signed. And that number is continuing to grow with over half of the world's population. You have 98% of the world's population already working on some form of reserve or some form of central bank digital currency, right? So you have this huge shift that's occurring. And then you have America that's pushing forward on a very, very expensive energy transition where our costs are going to continue to rise. I mean, it looks like we're positioning ourselves to step down as the reserve currency, and we're allowing China and India and Russia and these other countries to produce goods at a lower cost and to provide themselves with more opportunity. That's what I think is going to happen. And especially as this kind of continues to unfold, what I believe is very likely going to happen is we're going to see tons of U.S. companies start to move into more favorable locations with lower labor costs and lower production costs. What do you think about this? Drop it below. Hit the like button, subscribe here, add me on IG for short form content and other content I won't post here. And if you need help fixing your credit, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com. And catch you guys in the next one.